let's move on to semiconductors, which has a similar story. On the daily here, let's just look at my bearish case. I ended up selling out early again. I sold out at the double top here at about 93 bucks. I missed, a $7 run. Again, nobody ever went broke. Taking profits, even though I do wish that I had held on to it. But I do have a bear case, and I didn't just sell for any old reason. So the bear case is that the long-term end of fifth Elliott wave, we have a breakout here, 1, 2, 3, 4, 5. This is the super cycle Elliott wave. Medium term end of fifth Elliott wave. So our medium term is 1, 2, 3, 4, 5. Short term end of fifth Elliott wave, and we'll touch on that in the lower time frames. We're at the 227.2 fib resistance level. We've set a new unsustainable uptrend. You see that, we rode this uptrend for a very long time, and we are just starting to set a new higher uptrend, which, is kind of a warning sign that we are overbought. There's RSI divergences all over the place. We are touching the top of the channel many times in a row, and I saw a head and shoulders, even though I'm not sure if that's still valid at this point. So going from the daily, let's go to the 2-hour. We can see that we are beginning to be overbought in the RSI level. I don't have much on the 2-hour chart. Let's go to the 1-hour chart. So the 1-hour chart shows a better picture of the medium-term Elliott wave I was talking about. We've got a 1, 2, 3, 4, 5 up here, target exit. And then I found a third smaller Elliott wave here when we had that big drop. Same thing, we had a 1, 2, 3, 4, 5. It's at the same level as it was up here at the end of the fifth Elliott wave, and you can see how strong this resistance level is here, just because of the wick on this candle that's profit taking, comes back down. The exact same thing happened over here at the third wave, at the end of the third wave. However, what's interesting is the RSI divergence, and that's what tripped me up originally, and the reason I ended up selling out. So we've got this extremely overbought RSI over here, and I can just drag it down here, and you see the RSI is lower, 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 lower. We have yet to come back to this high, and meanwhile our price has made a higher high currently, a significantly higher high, and this is an RSI divergence. I think stochastic divergences are easier to find, but RSI divergences are significant in their own right. Anyways, here at the end of our 3, 4 here, we come down to our stochastic, and we have a lower high, or we have a higher low, and then we have a lower low, while price makes a low and then a higher low. Again, this is just two different divergences, and this forewarns that potential, pricing could be at risk, I guess, is the best way to say it. So from the hourly chart, let's see if I have anything on the 30-minute chart. And the 15-minute chart. I'm starting to think this might be a 9-wave pattern, which does happen at the end of the fifth wave often. And so this is a continuation of the Elliott wave. It's a 9-wave pattern. So however, TradingView doesn't have a 9-wave pattern, so I just restarted the Elliott wave trend. But we do 1, 2, 3, 4, 5, 6, 7, 8, 9. And 9 is our ending price, I guess you would say. Oh, here's the second diamond that I found, I guess. So I thought this was a head and shoulders. We come up, left shoulder, head, right shoulder, and I was afraid we were going to break down, sold my shares. Turns out, I think this might be more of a diamond, to be honest with you. We come up here, and, you see the shape. I don't have to explain it, but the main thing is that we go from high to low in one move, basically. So after taking a second look at this diamond pattern here in the middle of a trend, it signals a continuation pattern, and that would fall in line with our prediction that we're doing a 9-wave pattern here. On the, I guess this would be 5, 6, on the 7th wave here, I see an RSI divergence, which means that, I am highly convinced that price will fall in the near-term future. It's not going to fall a lot, but it's probably going to, give back the gains it had today. We're at 261.8 now. We're above these highs. We are above our channel, which, like I said before, has acted as extremely firm resistance in the past. And if you want to talk about volume, we can see a ton of buyers taking profit right here and a ton of short positions coming into the market with this volume right here. This is bare red volume. And what's next is we have an RSI divergence. We have this high coming down, and we have yet to get above this, descending light blue line, while price makes this higher high here for semiconductors. Let's see, do I have anything on the 1 minute? I don't think I do. Ooh, I do. So on the 1 minute, here is my thesis for selling out in the head and shoulders. So just to, this could have been a head and shoulders, a diamond continuation pattern, or a descending triangle. And at the moment, it looks like, I'm convinced that we have a descending triangle going on here. So we come, touch, spike up, set our first resistance, come down, confirm our support, and set our A, B, C, D, E again. We stall up a little bit, and then we break out, and then we really break out. Another thing that I, while doing a little bit of studying this weekend, I looked more at volume, and during these dips for a descending triangle, it basically makes a descending triangle on the volume as well, except for during the breakout phase. So volume is supposed to trend lower. When it reaches the high, it spikes back up, lower, spikes back up, lower, and then we are at our final E, and it moves sideways. And I have a few more examples of this in my videos, and I'll show you it again if you're not convinced. And then another thing I studied up on is measured moves. And for the descending triangle, you're supposed to pull it from the high down to the low. And we had, an ultimate low down here about, 20 cents lower, but it was a wick, and there was a double wick here. And the double wick matched up with this over here, so don't get mad at me for not pulling it all the way down. So you're supposed to take this, I cloned this, these dots down here, and you're supposed to pull it over to the breakout zone, which was right here, and this is your measured move, and you're supposed to, sell at this. I guess this would be 127 or whatever, and it worked out pretty well, actually, and I've been finding that it works out fairly well. Last thing, I guess, on the 1 minute chart that has got me spooked, and the reason why I think semiconductors are still going to fall, just like technology and inverse VIX, inverse volatility, I am never going to recommend a short position. If these are long-term holds for you, go ahead and hold it, but I'm a shorter-term trader. So we have this new breakout here, and we're definitely in a wedge pattern. So we come up here, this is our high, this is our second high, and a wedge pattern is confirmed with 5 touches. That's 3 on one side and 2 on the other. So we have 2 here and 3 here. And so this is basically the pattern. I mean, another thing about the descending triangle that it talks about is the retouch. And I guess, we break out here and we come back down. And if you want to count this as the retouch, you can. It says that the retesting of the previous resistance line usually comes at the apex, which, is pretty dang close to the apex right here. So that's another thing I'm going to touch on. That's why I just explained it. But anyways, we come back up and we make these smaller moves, and we get compressed here, and we actually fall lower. At the same time, you can see the RSI is turning down. There's kind of a divergence going on here. This is what I'm talking about when I say divergence. Higher RSI, lower RSI, high price, higher price. And another thing is our stochastic is moving down, down, down at a rapid rate, while price is moving down at, a pretty moderate rate. So what I expect is, like I said earlier about my descending triangle, is this apex is very important for some reason in the fluctuations of price after a breakout. So this is a breakdown, but this wedge pattern hasn't hit its apex yet. I predicted that it's going to hit its apex right about here. So I think that you're going to have one more leg up to 120 or whatever, and maybe take some profits, set a stop loss or something like that, and then I think that we're going to come back down, test the support area over here, This is moderate support. We've got a low here, a high here, and a high here. So this is moderate support, and I recognize that. And so I think that we might bounce and offer a second chance to get out. But with wedge patterns, the pattern is supposed to go all the way back down to the breakout point, which I'm saying is down here at about $97. So I do think that we're going to give up today's gains, and after that, it's anybody's game. It could move up higher. We still have, I think, 2 waves left. Yeah, so this is the top of our 7th wave now, if we believe in our continuation 9-wave pattern. So this would be, again, 1, 2, 3, 4, 5, 6, 7, 8, 9. We're supposed to set a higher high yet. I'm not sure how much higher the price can go, though. Anyways, that's my analysis on semiconductors as of right now. I'm very, very short-term bearish on it. Let's go into volatility. Let's just get the big 3 out of the way.